So unlike with your typical roles with your creative assistants where you're working with them one-on-one, Ryan is here to support all of you with about 3 to 5 hours of support based on whatever it is you need. So if it's just a look over your books, if it's help setting something up, Ryan can help you with that. We're going to give Ryan an opportunity to really get to know each of you and to talk about the work that he's doing as well at about 2 o'clock. Because we also have Taylor here. Hi, Taylor. Taylor is here to talk to us a little bit today about taxation. And what we're going to do today is we're going to have Taylor talk to us from about 1 to 2 about some overviews of taxation. We'll take a bit of a break because we respect that taxation is not everyone's favorite, and we're going to make sure we have breaks today. And then we're going to take some time to introduce Ryan and have you each introduce yourself to Ryan. And then Taylor will come back and we'll continue with our topic of taxation. All right, so any questions before we get started on those things? All righty, perfect, awesome. Okay, so as I think we heard yesterday, I know Taylor extremely well. In fact, we cohabitate and he is my husband. So I'm going to have the super fun job of reading his professional bio, because this is kind of one of my favorite parts about LEAP, is when I get to talk about people that I know in a personal sense professionally. So here we go. Taylor Carson is passionate about tax. Taylor is a CPA CA and holds an in-depth tax certificate from CPA Canada, a Bachelor's of Business Administration from Wilfrid Laurier University, and a Bachelor's of Mathematics from Waterloo University. Taylor currently works for the Cooperators Group, where he is the Senior Tax Planning and Advisory Manager. He works on corporate tax for many subsidiaries of the Cooperators and leads his team towards responsible tax planning and filing. Prior to working at the Cooperators, Taylor worked in public accounting for over 10 years with BDO Canada as a manager of taxation. Taylor has taught small business tax for the Fanshawe College Woodstock campus and for continuing education at Fanshawe College. Other than tax, Taylor loves personal investing, games of strategy, playing with our dog, who, as you all know, likes to roll in dead fish, traveling the world with me, and hanging out with his absolutely stunningly beautiful, amazing wife. So with that fun introduction, thank you. See, I see you all laughing, and I need that, I crave that validation. With that, thank you, Josh. I will turn it over to the lovely Taylor Carson to tell us a bit about everyone's favorite topic, business taxation. Over to you, Taylor.
Thanks, Kelsey. Always fun to have Kelsey do the introduction for me. She asks me every year if I want to do it, and it's just fun to hear her do it. So, especially when she adds the end piece about my amazing, beautiful wife. All right, so as Kelsey mentioned, I'm here today to run through what I've coined as being a small business tax workshop. So I've run this through LeapIn a few times as well. And just as a heads up, the content seems pretty light when you're looking at the form. And if I'm just going to sit here talking about it, we can probably get through it pretty quickly, but we won't get as much out of it as we will if you guys are asking any questions. So my session here is meant to be pretty interactive. Have no problems if you guys are jumping in at any point during the presentation, just to stop me there and ask a question. I haven't used Zoom too many times, so I'm not sure if there's that raise a hand thing if you want to do that, but you can also just raise your hand on video or just start speaking. I don't mind being interrupted, and I'd like to have some of that back and forth in order to make sure everyone gets the most out of the session. When it comes to this, it's a very straightforward but also complicated section of starting your business, right? So lots of people have the same questions, lots of people have different questions, and there's no dumb question here, so feel free to jump in whenever you want. With that introduction, I'll just kind of jump into the material. Dave has shared the presentation material if you want a copy for yourself. I leave some extra space on bullet points for when it was an actual physical handout for people to make notes, but easy to make notes as you go along. Yeah, so I don't know, I think actually I might just share my screen just to go over the presentation here. Hopefully this works. let me know if you can see it there.
Yep, we can see it.
Okay. Just trying to see if I can see everyone still. Here we go. All right. So the thing I always start off with is record keeping. So this is an adjustment for everyone as you start operating your own business, is needing to keep records of pretty well everything from a financial standpoint, right? CRA requires you to keep your records for 7 years to support all of the data you're putting into your tax return. They have the ability, once you file a tax return, to go back and audit for up to, I believe it's 3 years from the notice of assessment date, once you get your assessment back on your return, right? That being said, with the way losses work forward and backwards, they require you to keep everything for 7 years anyways, all right? Now, this is something that's changed in recent years. There isn't a requirement to have a physical copy of everything, right? A electronic copy is fine as well. So feel free to scan all your receipts, keep them in a folder on your hard drive, etc. I mean, I've been doing this for a while, so most of my clients, bring in the paper, the shoebox of paper receipts every year. It's really great if you organize them, especially if you're working with an accountant to do it for you, or a bookkeeper to do it for you, because that saves them a lot of time, which then saves you on your bill, right? So good idea to kind of keep things organized, and I'll show you in general how what buckets you want to organize into once we move along a little further, right? One important item that all of your clients or customers are going to want you to generate for them is an invoice, right? You should be generating an invoice for all of your sales. I've listed the main things that need to be on your invoice. Your business name, you should have an invoice numbering system so that you can identify them and go back later. There needs to be a description of the product or service you gave or sold. And you need to have your HST number on there if you're HST registered. So we'll cover HST later in the presentation, of course. That's always an interesting topic. But if you are registered, you do need to give your HST number on the invoices because your customers and clients will need that in order to back up their ITCs or their HST claims later. All right. When you're getting started, I know that everyone likes to keep costs down. So when you're starting out with your business, if it's a small business with very few transactions, your bookkeeping doesn't need to be in a complex accounting or tax software, right? I know quite a number of businesses that managed to keep all of their general books in Excel because they were small enough or had a limited number of transactions, right? Once you get into a large number of transactions or any complex bookkeeping, that's when you start looking into something like Simply Accounting. I think it might be called Sage now, actually, sorry, or QuickBooks. There's online versions of both, and there's desktop versions of both. They all work pretty well. There's many other softwares out there. These are just the main two that I like to highlight. Most of the softwares now have an ability to download data right from the bank and upload it into the software. And then you've got a step in. You don't need to create as many items when you're working in the software. So that's really helpful. But like I said, if you're looking to save costs and if you have the time to do it, you can just make a quick Excel file. But overall, it's important that you're keeping a copy of these receipts and invoices as you go. The most important part is to back up expenses you claim on your tax return. So I start out with the scary thing of, if you don't have an invoice, CRA can, or a receipt to back up your expenses, CRA can disallow it on that basis alone. So even if you've got a credit card or a bank statement showing a transaction, if you don't have a proper invoice or receipt, theoretically, CRA can come in if they're auditing you and say, no, that one doesn't count, you can't claim it, right? Now, in practice, don't let this stop you from putting expenses on your return if you forgot a receipt or you didn't get something. Just know that there's a small risk there. And if you have a reasonable CRA auditor, they will probably work with you and say, okay, no, I see that, and I see how that's business related in general, right? But I come across with the hard line of keep everything just to avoid any of those risks, right? Because you don't want to rely on CRA auditor being in the good mood that day, right? So that's pretty well where I'll end off on record keeping. Pretty quick topic to start the day with. So is there any questions on that anyone has?
I did actually have
Yep.
one question. I'm surprised you didn't mention QuickBooks. I thought that was the industry standard.
Yes, sorry. So yeah, QuickBooks is in there, and
Oh,
it
okay.
is one that I would say is the most popular
Oh, okay. Okay.
across the industry, especially with QuickBooks Online. It makes it easier, especially when you do have an accountant. You can give them an online login, and they can just use their own login to go in and do their thing after the fact, right? And it's pretty good for keeping everything together in one place. The softwares will generate invoices for you, so you don't have to figure out how to make your own invoice, right?
Yeah.
They do a lot. Yeah, QuickBooks and Simply are the two big ones.
Okay. Yeah. Sorry. I guess that was my fault. I didn't see the QuickBooks.
No worries, no worries.
I did actually have one more question though.
Sure.
How often do you use, or is it used like to pay by e-transfer? I see that my customers prefer it because it's more of a like a service thing, but I'm trying to get like a lot of small payments. Is it realistic for me to try to work with e-transfer in the future?
Yeah, so that will end up coming down to personal preference. So there's nothing prohibiting you from using e-transfer as a way of collecting your money.
Yeah.
I have kind of heard that, if you don't have your customers aren't entering the invoice numbers in the comment on it or something, right? It can become difficult to track when you have a lot of small payments, at which point, receiving, something physical might be better. That being
Yeah.
said, if you can keep up with the tracking on it, it's definitely a good and efficient way. It's cheap for your customers, right? It's cheap for you, I believe. No fees on the back end compared to the credit card charges and whatnot, right? So definitely a reasonable thing, but the tracking of it can become cumbersome if you have too many
Okay. Yeah. That's
volumes.
what I was assuming.
Yeah. Yeah, because at the end of the day, right, it's your record keeping that's going to suffer if you can't keep up with it, right?
Yeah.
Then
And
you'll
that's
be the
kind of
one
what's
that isn't
happening.
sure who paid and when they paid, and if people pay on time, and what's outstanding with all of your customers and clients, right? So
Yeah.
that's where the confusion can come out later, but
Okay. Thank you.
no problem.
I have an additional question to that because I accept quite a few email transfers from my customers. But what if someone's paying with cash? Like, what's the best way to, I guess, record keep in that situation, especially right now when so much stuff is not done in person? Um,
Yeah,
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 I guess
absolutely.
just like, yeah,
Yeah. Yeah, so I mean, it's important from a receivable standpoint to keep up on your cash payments, right? Because depending on if they're paying upfront or not, if they're not paying upfront, if you're doing accounts receivables, you need to make sure you're not asking them to pay a second time, right?
for
From
sure.
a cash perspective, there's in all of the Simply and QuickBooks systems, you can have an account set up for cash, right?
Oh, perfect. Okay.
Where you could, what you would do is you would debit the cash and credit your sales account directly, or accounts receivable for whoever paid, right? Um, and then whenever you make a cash deposit, it's a quick entry from the cash to the bank account, right?
Okay. Yep.
The alternative is to wait until you actually do deposit the cash, but then you're gonna have to keep a note of whose cash was where if you're trying to offset receivables, right? So um, there's no problem receiving cash, right? Just a matter of making sure you account for it against the right person who paid you.
Perfect. Awesome. Thank you.
No problem.
Ebony has a question.
When are you supposed to save receipts for um, things that you buy while you're working as an entrepreneur? Like if you're going using gas to get to a meeting, if you're buying your client, lunch, if you have to go for a trip to, or for something like that, like. Uh, how do you know which one of those receipts to keep and what you're allowed to claim and stuff?
Yeah, that absolutely, that's a great question. So um, for the receipt side of things, eh, anything related to the business directly, right? is something you should be keeping track of. And anything you're keeping track of to claim as an expense, you absolutely should be keeping a receipt, right? When it comes to a car, I can get into that a little later for the vehicle receipts and how those should be dealt with. But for everything else, you know, your meals and entertainment, taking out a client, anything like that, right? You do get to deduct those at 50% if it's business related, right? I believe that to keep things straight, a lot of you know, salespeople and whatnot will, you know, write down who they met with, right, to prove that it was a business lunch and not just a personal lunch with your friend, right? CRA might challenge that if it's an unreasonable amount given whatever your business is, right? But overall, I would say that, yeah, if you're taking a client out or a customer out to lunch to talk about your business and try and sell something or do any sales and anything related that way, you would want to keep that receipt. You would expense it for sure, and then keep the receipt for the 7 years.
Tracy?
I have a question. I have a few questions. So with past expenses for equipment, so like let's say we bought anything like last year, but we registered our business this year. So you're gonna hear a baby. He yeah. Anyways, he's not very excited about a diaper change. But can we claim past expenses from like last year that were business related, but we didn't register the business yet? Does that make sense? How does that work?
So that's an interesting question for sure. So there's a couple pieces to that question that I'll jump into first. So I'll lay out the two kind of sides of that, right? So it is important kind of to note when you're going to be quote unquote starting your business, right? So if you've already completed your 2020 tax return, right, that's where you would have needed to write those off. That being said, you can amend your return last year to go in and put last year's expenses on it and show that the business started last year. From a tax perspective, you don't have to have completed all of your business registration at the time you start your business, right? That is one of the first steps you should probably be doing when starting a business, right? But the tax start date for your business doesn't have to be the same as your business registration date. Okay. When it comes to, you know, the expenses that you claim in a year, those need to be reported in the right place. When it comes to equipment that you owned prior to starting your business that you have started using for your business, right? You can pretend to buy it from yourself for its value at the time you start the business, right? And then when it's equipment, that'll be a capital asset, which I'll get into quite shortly here, right? In which case you have to depreciate over time. You don't expense it right away, but you can go back and set up those assets that you had before you registered the business for sure.
Okay. I have another question.
Yeah.
With regards to leasing equipment versus owning our own equipment, what's your views on that? I have video and photography live streaming services.
So in general, I don't have a specific preference either way myself. And it usually ends up coming down to the rates you would pay on, you know, borrowing to buy the equipment versus the rate you're going to get in leasing, and then what your cash flow is, right? So if it's very expensive equipment that you don't have the down payment for, or that you aren't able to purchase up front, if you don't have enough cash ready to buy it, that's where leasing or getting a business loan to be able to acquire the equipment is very helpful, right? From a tax perspective, how the lease works out is that you just expense whatever you're paying on the lease, right? You don't have to capitalize the asset, even though it's a capital asset, because you don't own it, right? When you buy the asset outright, you depreciate it over time. And so you get a slightly higher depreciation in the first year and then less of a write-off as you approach later years. But at the end of the day, over the term of kind of owning it or leasing it, you're going to end up with a similar enough write-off that usually that's not the determining factor. And the determining factor will be the cash you have in order to buy it, or your preferences on ownership as well, right? So yeah, unfortunately it's not I don't always lean one way. It's always a situation specific answer, but those are the items to consider.
Okay, and I have one last question with regards to expenses. With receipts and such, are we able to like have everything? I know you talked about like having digital, but are we able to take like a photo or a scan of a receipt to keep it instead and like file it away electronically rather than physical copy?
Yeah, definitely. Yeah.
Okay.
Yeah. Just when you're doing that, you got to make sure that you capture the whole receipt, right? So you don't want to cut out the key to the receipts is similar to the items that I've said you need to put on your invoices. You need to have those available on the receipt as well, right? So don't cut off the fact that you bought it from Home Hardware on January 2nd, 2021, right? Like that's the piece you need to have. You don't just want to just get the item and the tax, right? You need the whole receipt. But as long as you keep the whole receipt in the photo or scan, that's fine.
So if we do like two parts, as long as we have some overlay to make sure that it like correlates with the same bottom piece, is that okay?
Yeah, sure. Right. As long as you can find it. So that's the other important thing when keeping your receipts digitally, right? Make sure you're organizing them in a way that you can go back and actually find them if you get asked for it. Right. The thing about the tax system, it's a self-reporting system in that in general, the upfront assumption is that you will report everything appropriately. And then CRA will just come out and audit at random to make sure people actually are reporting appropriately, right? So you might keep these for 7 years and never need to get it again. But you might 3 years down the road get an audit where you have to go back and find the receipt from January 1st for Home Hardware, and you need to be able to find that in your system. So keeping folders by month or by category or any kind of appropriate organizational system is good. Yeah, no problem if it's a 2-picture thing. Not a problem for sure.
Okay, as long as you can find it.
Yeah, exactly. Yeah.
Okay, thank you so much.
No problem.
Josh, you have another question?
Yeah, and I'll keep it brief. Sorry, I know there's a lot of questions, and I have a million of them too.
Makes for a good session.
Exactly, right? Are you going to cover anything about like automating bookkeeping in this talk? Or do you know anything about automating or automation?
No.
Okay.
Yeah.
That's okay. I just wanted to ask because I've run into a couple issues of like manually matching each transaction to a record, which will take up time in the future. I don't know how Amazon does it. Do they have people who manually track everything? Like it just seems like there's got to be a way for people to or to not have like a manual process like in the future of doing very specific tasks like that. But it's okay if I understand you're just the brain, not the not this part of it. But that's okay. Thanks.
Nope. Yeah, fair point. But yeah, like exactly like you said, not something I've been involved with in my past, so can't really touch on that one.
Okay, no worries.
I know there is like softwares out there that are trying to do that. I can't comment on any specific ones, but I do know that there's softwares out there where you can scan your receipt and in theory it automatically does the bookkeeping for you, or once it the AI picks up enough of what this receipt should go to, it'll start to auto do it or make assumptions on where you should do it. I think even QuickBooks makes an assumption and just has you go in and double check it and click OK before it imports when you do your bank. But just haven't had a lot of experience with them, unfortunately.
Yeah, no worries. I appreciate your time anyways.
Yeah, no problem.
Taylor, Evity's asking if you can claim things even if you didn't make money for the year you're claiming them for.
Yeah, actually, that's a great question. And something that will actually kind of lead into the next section. When you're starting up a business as a sole proprietor, right? All of your business income gets reported on your tax return as a net income or net loss, right? It is perfectly reasonable, normal, and honestly expected that in the beginning years of a business, there will be losses as you make your first expenses, buy your first equipment, get started, have marketing and sales and general and administrative expenses before you even get your first sale, right? So absolutely normal and expected to put a loss in your first year. Hopefully that, at some point you do make money. That is one of the requirements, is that when you are putting the business losses on your return, the phrase that gets relied on is there must be a reasonable expectation of profit, right? That can be shown in many, many different ways. A tax court case that I always think of when I come back to this, there was a person that started a sole proprietorship that was blogging about his favorite sports team. So in the first couple of years, he traveled along to various games, right? Submitted all those expenses to go and started a blog where his hope was he would grow enough of a subscriber base to start being able to sell advertisements and all of that on the blog, right? In his first year, I think he tried to write off losses of about 40,000. The second year was another 26,000, right? And he got audited and CRA didn't like it, so they took him to court, right? And he won the case because he could show that there was a business plan, that he had started getting his first things of revenue. So he did have like 4,000 in sales that second year, right? He could show his subscriber base was growing, which is the requirement to have people actually want to pay to advertise on his site, right? So because he could show that there was a path to profit, right? And he could show that his sales were growing in order to start covering the costs he had to incur in order to get started up, the tax court sided with him and said, yes, we agree, there's a reasonable expectation of profit here. You can deduct those losses. So he ended up being able to deduct that total $66,000 of losses against the other income that he had those years and get tax refunds out of it, right? That's why CRA doesn't like it. But yeah, at the end of the day, there isn't a requirement to be profitable to have a business, but there is a requirement to have a reasonable expectation of profit. You need to prove that you're not just, trying to get people to pay you for your hobby, right? That you never expect to make any money on, and you're just trying to recoup some of your expenses. You can't just claim those losses against other sources of income, right? So you do need to have a business, but as soon as you've got that you've crossed that point where you've got a business, you've got a plan to make money, right? You can say, this isn't just something I do in my spare time, this is what I'm working towards. And so that's where you will claim your losses. Now, as an individual, right, you have to report all of your various sources of income, right? For a business, for either a sole proprietor or a partnership, you need to use the calendar reporting period as your fiscal year, and that gets added to your personal tax return, generally through this form. It's called T2125, or Statement of Business Activities, right, on your tax return. If you have a loss, that loss offsets your other sources of income. So if you made, say, 40,000 from employment, and you lost $10,000 from your business, you would pay tax on the $30,000 difference. You'd apply that loss. If you don't have any other sources of income, that loss can carry forward up to 20 years on your tax return to offset future sources of income, right? You can also, I believe, carry that loss back 3 years, but that's a lot less common. So I mean, that's a great question that leads right into this section. That if you're unincorporated, that loss gets applied to your other sources of income and reduces your tax bill overall. So absolutely start claiming all of your business activities as soon as they constitute a business with reasonable expectation of profit.
Abby, you have a question?
Yes. So my situation's a bit, so I can understand if this isn't a question for the entire group, but what if you have more than one business? I currently have I have to report it as a business because I get paid as an independent contractor.
Yep.
So I pre-COVID did a lot of brand ambassador work through experiential marketing. So agencies would hire me as an independent contractor. So as far as CRA is concerned, I already have that as a business,
Yep.
but I'm now starting this one. So I'm just
I'm just like, I would suspect I would need another T2125 for this business, but then I kind of run into some of the stuff you're going to talk about later with like business use of home, and like, can I divide that between both businesses, things like that?
Yep. Yeah, no, absolutely great question. So if the two businesses are similar enough to that you would consider them the same business, or if you can consider it the same business, then you can claim it all in one 2125. If you do have two absolute separate businesses, you're exactly right. Within the program, you just add another 2125 and then report the two businesses separately, right? So you do all your record keeping separately, and you would do all of your tax reporting on two separate business forms. For the home office expense, again, exactly as you had described it. So you hit the nail on the head, right? You could split it by time in the home office between the two businesses. You could
Well, I
argue
just
that,
adjust my percentage then of, like, for one business it may be 20%, and then the other business it may be 10.
right? Yeah.
Okay.
So you would have and we can jump into the specifics on this a bit later, right? But what you would probably want to do is just change the percentage, like you just said, right? So if you were claiming 20% of the house for your home office, right?
Mhm.
You could only just claim 10% on one and 10% of the other, or you put 50% of the costs in each form. Like either way works out.
Okay.
Yeah, that's not like there's no button on the form to put in percentage for this business versus that one. So
Right.
you just
Okay.
have to
Thank you so
pick one
much.
of the other methods to make sure that you've prorated.
Okay. Awesome. Thank you.
No problem.
Tracy?
Okay, so I have two questions.
Yeah.
So one, and it's kind of an interesting kind of situation, but can you legally hire, expense and charge or pay yourself between two companies that you own? I'm just wondering how you go about that, if it would even be legal at all, or how that you go about that. But my other question, and if we're gonna go into like double companies, like you just said, then maybe that'll be on later. But I'm also wondering about, like, are we able to hire a nanny on staff through our company, or would that be a completely separate thing?
Yeah, no, totally fair. Great question. So the first question, I will give you the short answer that probably ends with you might need to ask for more assistance from, like, direct, more knowledgeable, like, go to a professional. But essentially, if you have two businesses that are not incorporated, you don't actually, like, you can't pay yourself a salary from either one, right? As an unincorporated person, you can't charge yourself a salary. You just get paid tax, or you just pay tax on the net profits of the business. If you have two corporations, there is ways to set up management fees in between the two based on time, or you can, as an owner of both, just choose how much remuneration to take from either one, depending on what your end goal here is, based on the question, right? But when you're unincorporated, you don't really play around like that. If one business is providing services that are in its normal course of business to the other one, that's normal. At the end of the day, you can, if there's some partnerships at play, maybe that's why you want to do it. But if these are both just sole proprietorships, it's not really going to make a difference at the end of the day from a tax perspective. But that's where, we might want to discuss other reasons why you might want to do that. But I don't think we have quite enough time to go into in depth on this question. So.
Okay, thank you.
Yeah, from the nanny perspective, you wouldn't be able to hire that through the business unless that was, unless you could make like in your situation, I would assume not, basically. That being said, in general, on your personal tax return, there is a deduction for childcare expenses to the parent with the least income when you're filing jointly. But so you will be able, like, you can get a income deduction for hiring childcare or paying for daycare or hiring a nanny or any of that. One quick note on the nanny is that in a nanny situation, they are an employee, but of you personally, not of your business. So do you have to, do payroll stuff for that? So quick note there. Hopefully that answers your question.
Tracy, does that answer your question?
Yeah, thank you.
Okay, great.
Ebony, looks like you have one more question, and then I'm going to let Taylor move on to the next section.
Okay. So when it comes to paying for things in your business, does it matter where you get the money from? Like if I, because like back in like 2017 when I was still on welfare and I still hadn't just had my son, like I was putting little amounts of money into different projects, and like I would have to let them know, but if it wasn't over a certain amount of money every month, it never affected the check I was getting. So then going forward also then I like invested in my business when it came to my student loans as well. One, is that illegal? And two, can I still claim things when I do stuff like that? Because like I will, pay out stipends for people that are on my team, and I will it's one of like I put it as one of my own expenses, and I don't know if that's even I can do anything with that since it's borrowed money.
Yeah, excellent question overall. So from a business perspective, and from a business tax perspective, it doesn't matter that you would source the money from anywhere, because that's money that you've got from another source personally, and then you personally made the decision to put it into your business, right? You want to be clear when tracking though that those are business expenses, right? Not personal expenses when doing any reporting. And I think when you go to your reporting, if you've started a business and you're reporting business income on your tax return, you want to make sure that or business losses or business income, right? You want to make sure that you're reporting that business income whenever forms are asking for that, right? So that would be a source of business income and losses. Okay.
So it won't, would it affect my OSAP, my student loans or anything? Because again, I'm still at that place of like investing and stuff, but like not the same return that I'm investing.
Fair question. On the student loan part, I can't really comment. I don't know a lot about what qualifies and disqualifies you from student loans, right? I can really only comment on the tax side. So I'm not sure how operating a business would affect your student loans. So yeah,
Thank you.
unfortunately, I can't really answer that any further.
Thanks.
No problem.
Abby and Tracy, are your hands up for new questions, or do you have them up from last time?
I think mine was still up. I'll take it down.
Just from before, sorry.
No worries.
All right.
To answer the student loan question, Ebony, I can answer that a little bit and can connect you with someone who can answer it more significantly. But OSAP is based on your income. So if you're making money in your business, just like if you're making money in a job, it'll matter.
Okay, thank you.
Awesome. Okay, go ahead, Taylor.
All right. So moving forward, the next big topic I just want to cover here is the actual tax itself, right? So you've done your record keeping, you've created an income statement, right? Now you need to report that on your tax return. So as I've mentioned, you want to report this on your form T2125, which I believe I have open here somewhere. There it is. All right. So the top part is where you identify your business. If you're doing business over the internet, this is an informational question. It doesn't affect the actual amount of tax you pay, but you are required to list your website and what percentage of your gross income you generate from websites through the internet. You'll be going down here, you'll enter your income in one of either business income or professional income. Professional income's, accountants, lawyers, doctors, etc. Right? Business income is everything else. To be 100% honest, I'm not 100% sure why they make you specify, but they do. Here, the form tells you to include GST up here and then take the GST out over here. I've historically actually never done that on personal income taxes. We just put the actual revenue amount in 3A here, right? The reason I like to show this form is this section. So part 3D and part 4, because this is going to show you kind of how, when you're doing your bookkeeping, you want to bucket your expenses, right? Because when you go to fill out the forms, this is what it's going to, this is the form that's going to be available. Now you will, when you're in your software, have more than one line for other here, right? And when you have stuff that just legitimately doesn't fit into any of these categories and you want to track separately, use the other. That's not a problem. It's not a red flag or anything like that, right? These are just the things that are very common amongst all businesses, right? It's not a hard and fast rule. If you have 4 different kinds of expense accounts that you want to track for advertising, you just add them up and put them on one line, right? You don't need to match this perfectly. It's just a good starting point for how to set up your chart of accounts or general ledger for your expense accounts, right? The other section, if you have partners, right, what's going to happen is here on this parts 3 and 4, you're going to report the total income of your partnership together. There's a spot at the top that says what percentage you are of the partnership, right? And then if you have expenses that you incur outside of the partnership but are just for running the business, you can list them here and still write those off, right? So if your partner says, I'm not willing to spend this much on gift cards for our clients, and you say, I think this is a great touch, I'm going to do it personally myself anyways, right? That's the kind of thing you'd list out here because you still incurred the expense in relation to the business, right? So that's just an important piece to note. This is where you're going to do your calculating the business use of home, which we will jump to at a later point here. Details of other partners, and then capital cost allowance, which we're also going to get to very shortly. All right. I just like to show this form briefly, mostly for that expense section. So when you're doing your tax returns, there's 2 types of expenditures, right? So there's current expenses and then there's capital expenses. So capital assets are going to be things that are used for multiple years that have value for an extended period of time, right? That's going to be things like your equipment, your computers, furniture. If you're buying a building or something, that's where this goes. This is for things that you own. So we already went through that lease question. If you lease something, that's an expense. It's a current expense because you're paying for a period of leasing it, right? Whereas if you bought a building to operate out of, you would capitalize it, right? You write these things off over many years. So I've included a link here to the CRA website that gives an example of the common capital cost allowance classes, okay? This website, you can basically kind of control F and try to find what you're looking for. If it's furniture, fixtures, equipment, and it doesn't have a special class, it's going to go in class 8, right? So it includes a lot of items you're going to have fall into class 8. Computers fall into class 50. Buildings are class 1, 3, or 6. You got to read through the little details there. It's usually class 1 these days. What this percentage is how much you write off per year, right? So if you were to buy a desk, for example, right, that'll be class 8, it's furniture and fixtures. You write it off at 20% of its value per year, right? So if you buy it for $100, the first year you'd write off $20, which leaves you with 80. The next year you write off $16, which is 20% of that remaining 80. So it kind of does one of these, right? You write off more upfront and less later. There's a half-year rule, so just because they don't know what point in the year, they assume you bought it June 30th, you only write off half of it the first year, right? That's not a big impact, but is worth noting when you go to calculate it. That's why it seems low in the first year. All right. The program will do all of this for you as long as you pick the right class. So that's why I like to include this site because you can use it to try to identify where you want to put the item. Okay. They are pretty prescriptive, like you must put it, it's not a choice. The one other item I like to point out is with a vehicle, there's a class 10 and a 10.1. 10.1 is when you're buying a luxury vehicle. Now they haven't updated the prices recently, so you know you can get a pretty normal vehicle for over 30,000 these days. So these are going to be vehicles that are more than 30,000, other than like your cube van or something where you're hauling equipment everywhere. So again, you'd want to read through this and possibly get some advice if you're in this situation. If your vehicle's under 30,000 in cost, you put it in class 10 either way, and that's easy, right? So vehicles, they both write off at 30%, but the luxury vehicle, make sure you only write off $30,000 worth of it. So you can't write off, people go out and buy a Lexus, you can't write the whole Lexus off. You only get to write off 30,000 because the rest is just because you wanted a fancy car in the government's mind, right? So that's my quick way of explaining that one. When you're paying tax on your business income, as an individual, so as a sole proprietor or partner, right, you pay tax at your personal graduated tax rates. So I've included a link here that just has a table of what all those rates are. Okay. Your first 45,000 of income is taxed at 20%. Your next, there's a 4,000 of a weird rate in the middle. After 49,000, it's 30%, just keeps going up. The top tax bracket in Ontario right now, if you make more than, I think it's $220,000 a year, is 53.5%. So it can get pretty significant. At that point, you're probably going to be leaning towards incorporating anyways. So just for fun, I have put the corporate small business rate here of 12.2%. While that seems like a great savings, right, you must know that that is the level of tax within the corporation. So if you want to spend that net income personally, if you want to pull that out and pay for your personal rent or car or groceries or anything like that, you have to pay the personal tax on dividends on the way out. That personal tax level gives you a credit for the fact that the corporation already paid 12%. Okay, so in Ontario today, it works out as if you didn't have the corporation there, if you keep spending the money. Where this becomes a really big advantage is that it's a deferral, right? So if you're going to keep the money in the business, grow the business, buy more equipment, pay down debt that you took on to acquire things, pay for additional capital assets, additional inventory, anything like that, right? You don't need to take that money out. And so you've only paid the 12.2%. So that other 8% you've deferred until you take that money out of the business way down the road, because you're reinvesting it right now. So that's the reason they have this, what they call the corporate small business rate, is to provide a benefit for you to grow faster if you're incorporated, right? A lot of people up front, and a quick note here, going back to that loss situation, right? If you've got losses up front and they're in a corporation, they're trapped there. So it will carry forward until your corporation makes money, but you can't apply it against other sources of income you have now. So that's, you got to kind of, there will be a point where everyone will consider incorporation. There's way more to consider than tax. I just like to highlight the tax piece here, right? But there is a potential deferral. But when you're losing money, it actually, from a tax perspective, is better to not yet be incorporated, right? Because you can write that off against where the rest of the money's coming from. Okay. Quick notes is you got a tax return is the same as your normal personal tax return. Your due date as a self-employed individual gets extended to June 15th for filing, right? Because it gives you a little more time to get everything together. However, if you owe taxes, they're still due on April 30th. So you still need to at least try to estimate what you would owe and pay ahead of time, even though you don't have to file till June. Most people just file by April anyways, because they want to know if they owe, right? Because that's where interest starts coming up if you don't pay by April 30th. When you're self-employed, on top of the personal tax, you also have to pay CPP on self-employment income. So as a self-employed person, you kind of get hit with both the employer side and the employee side. However, the tax return will do all these calculations for you, but as for the employer side, you write it off against your net income, right? So you get to deduct that while you pay it. And for the employee side, you get the same tax credit that you would if you were paying CPP as an employee. Okay. And then the big thing so like that's number one is like an unexpected cost that people get when they get to the tax return, right? So if you make $10,000, you got to pay CPP on that 10,000 on both sides, right? That's always unexpected at tax time. And you don't know what your net income is until you do your tax return, right? So you can't remit this early or anything. It'll just be part of your return. So just keep that in mind. The other thing to keep in mind is when you first start making income, there's no tax withheld on that income like when you're an employee, right? You know, a paycheck where they're taking a percentage off every time you get paid. So most likely you will owe in April. So you want to start setting aside some amounts once you start becoming profitable to pay this 20 or 30% tax hit, right? You want to save ahead of time. No one's forcing you to do it, but when it comes to April, you probably want to have that money aside when the tax bill comes, right? After the first year, CRA will make you pay installments during the year based on the previous year's income. So when you're growing, you'll still keep owing, but once you kind of level off, if you make 50,000 net income for multiple years in a row, right, you will have had to pay installments throughout the year, so you don't have these big tax hits in April. But as you grow, right, if you made 10,000 in year one, paid a bit of tax, they'll say, okay, you owe me installments on 10, but then you make 20, you're still going to have that tax on the net 10 that you haven't installed yet. So even once you start making installments when you're growing, you need to be prepared to have some money come April to pay the tax bill based on your profits. Okay.
Taylor?
Yeah.
I know you have to leave us in 5 minutes. I'm gonna go to Brittany for a question, and then Evity, and hopefully we can get both of those in 5 minutes. And then the rest of you, I suggest writing down your questions and we can circle back on those at 2:30. All right.
Yeah.
So go ahead, Brittany.
Great.
Hi, thanks. Thanks for coming. So my question is about like when you categorize expenses, specifically, so I run an e-commerce store. We do imports and like really minimal exports, but we pay a lot in like shippings, both when we're importing, shipping to our customers, as well as like duties and stuff. So I was just wondering, like we track it all, but where does that should be tracked in terms of like when we're accounting it or for our accountant?
Great question. So for the most part, I generally see that be tracked under the cost of goods sold section as, you know, freight and duties, which I believe you would end up putting here on this other costs line in the cost of goods sold section. Okay. You can put it down here. And again, this comes down to personal preference. The one thing I'll say about like the bookkeeping and accounting side is as you transition and as you grow your business, you like to see things a certain way, right? And know what's administrative versus what's part of your costs of doing business, right? So you may want to keep it up in the cost of goods sold. And that's what I see in really developed businesses, right? And you'll just put it under other. Otherwise, you'll just keep it here, delivery, freight, and express, right? Generally, that's when you're delivering to clients. And this is when you're paying delivery to get something delivered to you. At the end of the day, from a net perspective, it's not super important for tax purposes. So it's where you want to see it in your statements. But those are the two places you'll put it on the return. And feel free to track them separately or together.
Okay, and then for inventory, when like the amount that like we send out on the invoice and like our customer charges is like slightly different than like what we get back because of like merchant fees. So like it's always like slightly less because they'll take like 2.5% for credit card fees and whatnot. So which one should we be listing?
Great question. So the general approach there is that you would put the gross amount in revenue, and you would take that merchant fee, that 2.5%, and either include it under interest and bank charges or other if you want to track it separately. But generally you would report, so if it was $100, if they paid you $100 and your fee was $260, right? And you only therefore got the $97.40 in your bank account, right? You would debit the bank for the $97.40, you'd credit revenue for $100, and you'd put the expense for the $260 in like a bank charge account.
Okay, thank you so much.
No problem.
Yeah, I wanted to just know if I'm incorporated in another country, how does that affect the tax? Like it's a separate business because it's incorporated and I'm registered as a sole proprietor, but how does that affect my tax? And also going forward, it's something where one business is going to be assisting another business. How does that work?
So that's a very good question, and it will depend on a multitude of factors, depending on the country you're incorporated in, their incorporation laws, their tax laws, our tax laws, whether we have a tax treaty with them, etc. That's kind of the level where I would say it's something we're not going to be able to fully cover on this call, and will probably require going to a CPA firm to ask those kinds of questions. The general answer is that while you're taxed on your worldwide income, if you leave the money in the corporation, it's generally not income to you. And again, I'm very much qualifying this as general answers here. Okay. But it's generally not income to you until you take it out of the corporation as a dividend, which just gets treated as like foreign income in Canada or general taxable income. It's not treated the same. If that corporation in another country is deemed to have a permanent establishment in Canada as a result of like the mind and management of the company being in Canada, you might actually have a Canadian tax filing for that corporation, even though it might result in no tax. So the question gets very complicated very quickly there, and probably requires some very in-depth analysis on all the facts. And
Thank you.
yeah. Apologize for the bad news on that one, but
All right, everyone. Taylor does have to leave us briefly for another meeting, so he will be back at 2:30. So bye, Taylor. We'll see you in a few.
see you later. Thank you very much, and I'll be back.
And we'll keep those questions that we didn't get a chance to ask Taylor ready for when he comes back. For now, because tax is a bit of a heavy topic, we're going to take a quick break. Please make sure that you grab a drink, take a body break. We'll just stay here. So if you want to chat with each other, please go ahead. And then at 2:15, please come back and make sure that you're ready to give your 1-minute version of your marketing pitch so that we can all introduce ourselves to Ryan. All right, so if you don't have that pitch, you have 1 minute to dig it up out of your computer somewhere. And hopefully, though, you're at the point now where you're able to tell us about your business in about 1 minute. And then we'll get Ryan also to just tell us a little bit about himself and his experience. And we'll have Stephanie just talk a little bit about the financial assistant program, which is super similar to the creative assistant program. I am not qualified to answer questions about tax, but any questions about what we're about to do right now? Excellent. All right, 15 minutes. See you guys at 2:15. Just missing a few. Josh, Evody, Cecilia, you can let us know if we're back. That would be great. Looks like not quite yet. We'll give them another 30 seconds. In the interim, I'll be turning it over to Stephanie in just a second, just to introduce Ryan and the program a little bit. I do want to thank you all for your accommodation. I know this is a bit of an untraditional schedule for us. And I think we didn't want to cancel, so this is sort of the best compromise that we could make. So thank you for changing gears with us a little bit here. I know that it kind of is difficult to shift in and out of financial mindset. So I do appreciate your accommodation on that, and thank you for it. With that, we're going to spend the next 15 minutes or so meeting Ryan and just giving him a bit of an overview of our business and maybe some of our financial needs. So Stephanie, tell us a little bit about the program and Ryan.
Great. Yeah. So I know Kelsey already kind of covered generally what this looks like. This is essentially, like she said, your counterpart to the creative assistant. So you've been meeting with your creative assistants. They've been starting to figure out kind of where you need that support. And Ryan's really coming in as, again, part of this pilot initiative to provide some of that support, but on the financial side. Of course, your businesses are all at sort of different levels of maturity, and you all have diverse needs when it comes to sort of financial literacy and financial support. So Ryan's really going to be working with you one-on-one to determine sort of what that business critical support is, how he can help set you up for success, and again working with you throughout the summer. Just like with the creative assistants, there'll be sort of an hourly cap on how much time Ryan is going to be able to spend with your business. So you really got to think sort of I don't know, smartly. That's the word that's coming to my mind right now because it's a Wednesday, yes. So you sort of have to think critically about what that support is and what you're really going to need help with, because it's going to be about 3 to 5 hours that he can spend with each of you, kind of setting you up for success long term. And again, this is just to get you started or to help you along wherever you're at. So I'll actually turn it over to Ryan to introduce himself. He might be a familiar face to some of you. I know Ryan mentioned that he had classes with one of you before. So I will let Ryan introduce himself, and I can't wait to hear more about your businesses as a group. So Ryan, take it away.
Thanks, Steph. So I am aware of Abby through the FAA. I actually didn't end up staying in that position. I've been going through a bit of a move. As you can see, I'm still not fully unpacked, but I'm currently in the Bachelor of Commerce degree program for accounting. We're in the bridge semester right now. I just recently finished up the 3rd year of the advanced diploma, graduated from that. So I am pretty well versed in a few things. And although I'm not a CPA yet, I can't give expert advice on tax and such. I can reference certain things or provide you a reference to people who are actually trained and licensed to answer those questions. However, I will be providing support in terms of financial statements, any financial understanding. I will meet with each and every one of you to go over what I can and cannot do, understand what your expectations are for what you're looking for any support for your business, as well as I'm really looking forward to getting to understand, why it's such a passion as well, and hopefully incorporate that into help growing your business as well. Especially with everything being online, I have a pretty open schedule. So if I'm not here, I still always have my phone nearby. Once everyone starts contacting me and I start reaching out, I'm very accessible, very reachable, and although I will guarantee within 24 hours, it'll probably be more within 4. I live on my phone nowadays, so I look forward to meeting each one of you and working with you to be as successful as possible.
Thanks, Ryan. And I just wanted to kind of add on in terms of process. I know we've got sort of a set process for your creative assistant. Ryan's going to be kind of taking this and leading it on, not on his own, of course, but I think he's going to kind of be going forward with it, meeting with you. He's got his own project document. So from there, that relationship will kind of develop organically. And we're happy to, again, take feedback from any of you, Ryan included, on the process and anything we can do to improve this moving forward.
Wonderful. Thank you to both of you. Yeah, we're really excited as with our creative assistant program to offer this resource for you. Keeping in mind that, any help that you can take advantage of, please make sure you do. If the questions that you have for Ryan, as he recommended, or as he said, are, maybe something more for a specialist or a CPA, he'll refer you on. But I know all of you could at least have somebody look over your books and make sure they make sense at the very minimum. Setting up things like income statements or financial statements or QuickBooks or something like that. That's definitely the type of stuff that you're going to want to be asking Ryan about, and he'll lead those conversations with you. So we'll leave it to Ryan to reach out to each of you and kind of start setting up that time. Again, being cognizant, you've got about 5 hours max, but that includes his time reaching out to you and talking to you. So consider projects that are more like a 3 to 4 hour project when you're talking to Ryan. All right. What I'm going to do now is just so that we've gotten to know a little bit about Ryan, it would be great if he could get to know a little bit about us. So I'd like you to tell us just who you are, what your business is, what your business does, and then if you have something in mind that's a financial project you could maybe use some help on, that would be really great. You know, you have about just a minute to do that. So, hey, my name's Kelsey. I am the manager at Leap Junction. Leap Junction is an entrepreneurial support for students and alumni who are looking to start or grow their own businesses. Something I could use help on is forecasting with COVID and how to ensure that with our budgets changing, we still have enough money for our key operational resources. That's sort of the level of information I'd like you all to be giving. And with that, do I have a volunteer who is interested in going first to tell us a little bit about their business? Josh, go ahead.
Hello, I'm Josh. I have mine written down right here. So Nearby Neighbors is my business, and it provides students in high school with their first jobs mowing lawns for their neighbors. So when a student signs up, they will get a schedule with a list of clients within walking distance, and then they'll simply walk to each customer with their mower, their trimmer, and to take care of their property. You know, a little story. When I was growing up, I found that many of my neighbors would prefer me with my dad's lawnmower over a professional landscape company. And I never really understood this. You know, I would have a hard time to compete on quality, especially, you know, with my lack of experience. And they were probably paying me a lot. I thought that they were probably paying me a lot less than the lawn care company, but, you know, sometimes they'd pay me $30 for like a half an hour of work, which is kind of along the lines of the market, you know. It hold on, oh, I lost my spot. Yeah, okay, it took me a while to realize that the older generation actually wants to support today's youth. They have an immense urge to nurture the 15-year-olds to have a sense of work ethic and determination and pride for hard work. You know, just talking to a few of my customers, they thought that there was no more hardworking adolescents out there and that they wanted to be YouTube streamers or something. But I ran my flyer and I found a huge number of students are actually looking to work, and a huge number of parents are really liking this idea. And now that I'm doing my canvassing, a good number of students or of neighbors really like the idea of supporting students down the street. A little over a minute, I think, but that was just because of stuttering.
No worries. I actually know a lot about that because when I was, even before high school, I was always going up and down my neighborhood street cutting everyone's lawns. So I definitely can appreciate what you're doing.
Oh, that's awesome. Yeah, I'm just facilitating that for everybody else.
Thanks, Josh. Reminder, we have 6 minutes to get through the rest of this. So maybe not your full 1 minute pitches, just a quick overview of your business and what financial needs you have is probably all we have time for. Sorry, guys. Steve, you have your hand up. Are you willing to go next? Great.
Sure thing. Okay, so I'm Steve, and along with my wife, Janan, we are Proofline Dairy. So we are in the process of setting up a creamery on my family's dairy farm, just 10 minutes north of London. And that will basically allow us to bottle our own milk and make yogurt and ice cream that we can sell through our farm store. In terms of assistance I'm looking for, up to this point, our farm, we basically deal with like 1 or 2 customers. We're not really a retail operation in any way. So with that shift, I'd be just looking for, you know, whatever feedback, guidance, things like that you can provide just to help us kind of make that transition.
Nice. Thanks, Steve. If everyone's okay with it, I'm just going to call on you in the order that you're in my screen. Wonderful. Maisie, thank goodness you nodded because you were first on my screen. Do you mind going next?
Sure. So I'm starting Pencil Cat Distribution, which is an online store management and order fulfillment service for designers and illustrators like myself. So I'm just like running their store, sending out packages and stuff like that on their behalf. So my number one financial concern at this point, I'm not sure if you can help with it, but is just like VAT requirements in the UK and Europe. So, yeah.
Great job, Macy. Thanks. I'll have Brooke go next, followed by Rachel.
Hi there, nice to meet you. I'm Brooke and I co-own Flicker Candle Company. We hand make our soy wax candles, but we mainly focus on private labeling with other brands or events or charities, fundraisers that are happening. And for the financial aspects, I would love like more organization. I currently use Excel. Any like guidance in terms of that? And I'm not sure if this is in the lines, but COVID, our supply cost went up a crazy amount, like over 25%, I would say. So any guidance on that would be amazing.
Thank you, Brooke.
Thank you.
I'll ask Rachel to go, followed by Brittany.
Hi, Ryan. I'm Rachel. My business is Rough Life, and we are an online store offering apparel and home goods with relatable messages specifically for dog owners. Just off the top of my head, I did have a business plan, but things have shifted since that original business plan was created. So I might need some guidance, just having a look over some new financial statements and whatnot. But I'm sure we can discuss what else you might be able to help me with.
Thanks, Rachel. I'll ask Brittany to go, followed by Tracy.
Hi, so my name's Brittany. I'm the founder of Reed Supplies Canada. It's an online store that sells music supplies to bassoon and oboe players across Canada. What I need help with mostly the financials is that we are tracking everything in Excel. And so just kind of like figuring out a better workflow. Like we still want to stick with Excel, but just like we're tracking it in our own way, not necessarily the way it could be most organized. So just kind of figuring that out.
Thanks, Brittany. I'll have Tracy followed by Abby.
Hi, I'll turn my video on. I'm Tracy. I co-own Select Start Network with my husband, Justin, and we are helping businesses reach their ideal client by providing exceptional images, videos, and live broadcasting services. Our needs from you are pretty much kind of like Brittany, like we just need help like with the organization of our finances for right now, and kind of how to go about that when it comes to tax time as well. All right. Thank you.
Thank you, Tracy. I'll have Abby go next if she's ready, followed by Ebony.
Hi, Ryan. Nice to see you again.
Yeah, it's been a while.
I know. So my business is Kina Hair Care. It is a hair care products company. And what I would need, like, given my accounting background, I have some of the ideas of what I need to do, but I also would like to delegate that because I have so many other things to do with the business. So like getting an Excel spreadsheet set up. My business is very in the early stages, so I haven't had to incur a lot of costs yet. So I don't have a large amount of expenses to track, but they're just getting stuff organized and sort of planning what the outlook is going to look like.
All right.
Thanks, Abby. You bring up a really great point too, that Ryan is here to help you. And I know I've had a conversation with a couple of you about, you know, does everything in your business need to be done by you? The answer is oftentimes no. So this could be a good opportunity for that as well. Ebony, are you comfortable going next? Followed by Cecilia.
Sure. So my business is Be Black Network. It's a consulting company igniting forward movement and creating tangible change towards the development and empowerment of the Black community. We do this by enabling organizations, businesses, and individuals towards exposing the problems, becoming aware of the gaps, educating on the solution, on how they can be change and conduits of change, and empowering forward movement towards their achieved and sustained goals and objectives. And my main thing will be, I've never done any sort of accounting, so I've run my business as a hobby for a long time without knowing that I was running a business. So I have a lot of stuff that I've spent money on, received money, and I don't know where to start. So just the information on how to move forward effectively as a business would be great.
Okay, so trying to get the records together, organization, try and get an idea of how to move forward, correct?
Yeah.
All right, cool.
Thank you.
Thank you. Cecilia, may I ask you to go next, followed by Ashley?
Sorry, I just trying to turn on my camera. I'm Cecilia, and I sell modest clothing for women. So I am super new to the business world. So even just help with setting up something like QuickBooks would be super helpful.
Awesome.
Thanks, Cecilia. And finally, Ashley.
Hi. Okay, so the Mindful Co. is a gluten-friendly, vegan, and nutrient-dense bakery. All of our products are made in small batches and made to order. So kind of where I'm looking for help is mass organization of all this kind of stuff. I'm really great at keeping track of receipts and expenses and stuff like that. But also just sort of like Abby said, like this is something that does not light me up in the slightest. So like I've actually already hired a bookkeeper to hire this out, but I want to make sure that I know what I'm looking at because I need to still know what's going on in my business.
Wonderful.
Awesome.
Okay. We have about 2 minutes. So I want to just open the floor here before we jump back into taxation. See if anyone has any questions for Ryan, anything that you want to ask, like, is this in scope while you're starting to think about what would be there before you even get started? Anything like that? Seeing none. Ryan, did you have any questions that popped up from any of the entrepreneurs? Anything that you'd like to ask them?
I don't have anything big right now. I will let you all know that I intend to have emails sent out by the end of day today. May go past the 4 o'clock mark, of course, because we're here right now. But over the next few days, I'm hoping to start scheduling meetings with all of you to start working and getting everything organized and hoping to make you more successful on a quicker basis, because now that this half of the term is coming to an end for me, I have lots of time and I want to use it to everyone's benefit. So really looking forward to all that. Wonderful.
Thank you, Ryan. And thank you for sharing that. It's always great to work with people that are excited to work with us. That's really wonderful. I will remind you that just like with our creative assistants, remember those scoping documents are going to be really important. Ryan is with us through the Ripen project. So we'll need to make sure that we get those scoping documents, and then all final documents that he submits to you or any work is going to have to go through that Ripen platform, but he'll also make sure to send that to you as well. So that's sort of how the logistics of our program will work. But with that, we will leave Ryan to connect with each of you and then for you to book a time with him. Just like with our creative assistants, remember, being cognizant, we're trying to book our timing between 9 and 6 so that we're not, burdening people with midnight appointments. Nobody wants any of that. With that, Stephanie or Ryan, did you have any other comments before we wrap up this section? No, we're good.
All good.
All right. Taylor will be back with us shortly, I hope, because that's what he said. But before we jump back into that, any questions from anyone in the group? Anything else?
I had a question for Stephanie, actually, with regards to the paperwork that you sent out. Do we have to send that back to you? Because there's still or is that just like something that we're going to be putting together with our creative team when we meet?
Yeah. So
Okay.
Your creative team is actually going to be responsible for completing those documents and submitting them. You, of course, will have to review them, sign it off, and you're going to co-create them probably when you're meeting with them. They'll kind of discuss what you hope to achieve. They'll scope it out with you, or you might go back and forth a little bit just fine tuning what those deliverables are going to be. So you don't have to worry about that. That was just if you had some ideas and you wanted to start thinking about deliverables, you could kind of jot them down and then have that to bring to your meeting. But you're not responsible for that paperwork. So don't worry. Well, you have to sign off on it, of course, once you've agreed to the outcomes. And then Ryan's actually he has his own sort of intake process. So his forms might look a little bit different based on sort of your needs when it comes to the financial perspective. So does that answer your question, Tracy?
Yeah, I kind of like went through it all and then I'm like, wait, I don't think I'm supposed to send this back.
Yeah, you guys are okay. That's just for your information, or if you want to start brainstorming, but that's really the responsibility of the assistants.
All right, perfect. Thank you so much, Stephanie.
No problem.
Excellent. Any questions about the creative assistant or financial assistant program before we jump back into tax? Seeing none. Oh, Tracy, stop sign. Love that. Seeing none. Taylor's back with us. Hi, Taylor.
Hello, sorry for the delay. My other meeting, of course, went slightly long for a few minutes there.
That's all good. Taylor, we had, I know Brooke had a question, but before you signed off, Ashley popped into the chat, and I will put this back in here, and maybe we can start off with this before we jump right back in. If there is a good resource for those considering incorporating, is that something that a financial advisor realm, or is it something else? Where would you look for the info on that?
Yeah, I mean, absolutely. So that was a question at BDO we got all the time as a financial advisor. So if you want to make sure you're getting the full best advice from the professionals, it's going to be an accountant and or a lawyer that you're going to want to talk to. So the lawyers will handle the legal, the liability side of what the incorporating would mean. Accountants would help you on the tax and accounting side. There are some resources online, but to be honest, I haven't spent enough time in them to want to recommend one, because where my experience has always been directly assisting clients versus finding resources to share. So I can't find you one right now. I might be able to take a quick look online later and send a link. I'm not sure what's going to be out there though. So at the end of the day, I would definitely, especially if there's any people available from an accounting and tax or accounting and law perspective to you, that's a good place to start to reach out. And again, from a tax perspective, it's where you're going to be keeping the money in the business that you can get the deferral. That's where you're going to want to start considering it. From a law perspective, it's usually a liability thing. And I think Ryan sent a link, so that's great. Thanks, Ryan.
Look at that, Taylor. You have 2 of your own financial assistants. It's great.
Perfect. There we go.
Perfect. And before the break, Brooke, you had a question. Is your question still relevant, or do you want to jump back into the presentation?
I was wondering if I could ask a quick question about the form you were showing about filing taxes when you have a business partner. Is that okay if you and your business partner are in 2 different provinces and one of the provinces charges GST and the other charges HST? Do you have to do anything extra for that?
So that's an excellent question, and will fall to where the kind of residence of the business is, right?
Okay.
So I actually know someone who had a business in another province but remained a resident of his own province. So essentially fill everything out the same. The business gets taxed based on, or your business income gets taxed based on its residence. So you might be paying some of that province's tax rates on that chunk of your income and some of your own province's tax rates on yours. When it comes to the HST, GST, PST stuff, right, that's all based on place of supply rules, which I can't get a lot into, and the complexities are over my head. We had HST specialists when it gets really complex, but essentially it's where the business itself is, right? So which is very complicated when it's a 50-50 partnership. You got to look at more than one kind of rule for that. But if the business and the products are being sold in one province, that's the HST considerations you're going to be wanting to consider upfront.
Okay.
Right? For your own expenses, like that after the partnership expenses, that's where you'd use whatever your province is.
Okay, thank you so much.
Yeah, no problem.
Go ahead, Brittany.
Hi, so I just had a question about like capital assets.
Yep.
So I play a musical instrument. It's worth about $12,000. And it's like very much a part of the business in that like I use it to do marketing and a lot of our stuff.
Right.
I'm wondering, like, it was purchased in 2017. The business was launched in 2018. We haven't filed taxes yet, so we're planning to like backdate our files. Should that be listed as like an asset or just leave it off? Or like, what's the benefit to doing that?
So I guess really the question is going to be, or you know what? Yes is the answer. You're going to be able to add it based on its value at the time you started using it for business purposes. The caveat here, clearly for the musical instrument, I'm guessing where this question is coming from is that you actually use it personally and for business purposes. So what you have to do is do an estimate of the split for that, right? Because you're not going to be able to write off the whole thing, only to the extent you're using it for business purposes. Within the programs that you use to file taxes, there's a box that says percentage for personal use, right? And so it'll say, okay, if it's worth 10,000, just as an example, or 12,000, you said, right? And it's a 10% rate, so that would generally give you a $1,200 write-off, right? But say you only used it 50% of the time for business, for touring, for showing off, etc., and 50% of the time for personal, where you're just doing your own concerts, right? You would put the 50% off and you'd only write off 600 for that year. One thing to then be, cognizant of is when you sell it, if you sell it, right? And you might have some recapture of that or a capital gain if you sell it for more than you purchased it for, right? And by expensing it through the business, you're now saying it is a partial business asset. So you'll have an inclusion of the same percentage essentially when you go to sell it, right? So just keep that in mind, that it's really good for writing it off and expensing it, but if you sell it, that takes it away from being a personal asset. So
Okay, and then my other question, follow up on that is like, so I will do like gigs and like recordings and stuff, and like I do all the invoicing and stuff, but it's like not invoiced as Reed Supplies Canada, but Reed Supplies Canada is like a sole proprietorship, so it is like just me. So is that like all the same thing, or are they two separate things when it comes to like self-employment?
yeah, that's an interesting question, especially because like you're not incorporated, and if you're not invoicing through Reed Supplies, right, then that kind of implies you're operating outside of Reed Supplies, right?
Yeah, it's just that like as a business though, because it's a sole proprietorship, it's like it's my name, not
right. So yes, the whole thing is kind of blurred there, right? So
okay.
it comes down to how you're tracking it. Now, I mean, that does sound like a second business though when you're invoicing for concerts and everything, right? But and given the nature of the two, you could probably combine them and say it's one business that I operate as a musician that sells supplies as well, right? But that really comes down to the nitty gritty of, are you operating two businesses or one, right? And that's more of like, that's less of a legal question, more of a factual question on your end, right? So
Yeah, it's like I advertise as two, but I
right.
feel like it's legally it's one. But
Yeah.
I guess that's my question is it actually one or is it two? It should be two.
Again, kind of tough to answer on the sole proprietorship, but I could see you treating that as one if you wanted to.
Okay, thank you.
Any other questions before Taylor jumps back into the presentation? All right. Yeah, go ahead and share your screen.
Okay, so just get my screen set up here for everyone. Okay. So at this point, we've essentially covered your personal tax situation and what you're doing for record keeping. My remaining three topics, I go in detail in the business use of home, so it is part of your tax return, but I go in a little more detail here on how you work it out. Automobile is very close to the business use, so I kind of combine them here and don't list it all separate for your car. And then we'll cover HST and employment tax. So this section is going to be pretty quick, although I know I generally get a lot of questions on this one, so feel free to ask if you can. For the business use of your home, when you're operating your business out of your home, you have the ability to write off some of your house expenses or rent, etc., based on the amount of your home you're using for the business. Okay. For business use of home, it's going to be based on either square footage or the number of rooms in your home, as well as whether or not you use that 100% of the time for business or not. So the square footage is typically the one you see all the time, right? So if your office is 200 square feet and your home as a whole is 1,000, you can write off 20% of the costs, right? Now, if your office is your kitchen table, you also have to then say, okay, well, I use it for business 5 hours a day and I use it for personal the other 19 hours, right? So it's another percentage grind down. Whereas like for me, I have a dedicated office in the home that, I mean, don't get me wrong, I keep a filing cabinet in here with my other computer and invoicing and all that, but you know, the office is business use primarily, right? So I would just base it on the square footage in general. But there is another rule that says you can use it by the number of rooms in your house, not counting hallways, I believe, or unfinished basement, right? And in the square footage, you also don't consider unfinished spaces. Okay. In general, the expenses that you can claim are heat and hydro, house insurance, property tax, mortgage interest. So not your full mortgage payment, the piece that's just paying back the loan, you don't get to write off, but the piece you're paying in interest, which is an expense, is. If you rent, you claim the rent. And if you're doing repairs and maintenance to the home, to the extent that, there's two approaches here. One is if you have a dedicated business area, like if you were like a massage therapist, right? And one room of the house was your massage area, right? All of those repairs and maintenance you could include. But if you're just doing general repairs and maintenance to the house, you can include it here, and it would like if you got, plumbing or something like that, right? You would include it as a repairs and maintenance and prorated along with everything else. Okay. One really big note to make is that if you have expenses that are 100% directly attributable to your business, even though they're kind of part of your house, the most common one is a direct telephone line or fax that you only use for business, right? I'm dating myself a little there when I say that, but I still had clients last year that used the fax machine all the time at their home. You would record those as a direct expense on the 2125 and not include them in the home office, right? The other typical ones you'd notice would be your internet and cell phone. So if you're using your cell phone, say 90% for business or 75% for business, right? And you could kind of back that up if you had to, right? You wouldn't include it in a home office expense. Whereas if you actually had a landline that you use randomly, that would kind of be in here. Your hot water heater, if you have rental stuff like that, that would be part of your home office expense as well. And yeah, that's a pretty good way to put it there. One thing to note is this can change over time. So I have a friend, he started his own business. He does like electrical and computer stuff. And when he first started, it was a small room in the basement he stored some inventory in, right? And then the next year he grew his business, so it expanded into that hallway and that other finished area in the basement. And by the third year, he was using like 40% of his house to store things on top of what fit in the van all the time, right? And so each year we actually changed that percentage. So it is subject to change based on what you're actually using in your home, right? So yeah, definitely something you don't have to be set in stone based on the first year, and you don't have to worry about stuff like that. So with that, I'll kind of open it up. Any questions on the home office?
I do have a question.
Okay.
With regards to like the cell phone, if we open up our own like separate cell phone, like just dedicated to the business, and that would be a direct attributable, right?
Yes. Yeah. Percent you would write off that whole thing if you have a separate phone line for the business, for sure.
Perfect. Thank you.
No problem. All right. So the only other thing I want to cover here is, like I said, for the automobile, it works almost the same. It's based on the kilometers you've driven though, right? So if you're using your personal vehicle that you've had forever to go do deliveries, right? Or something along those lines, go pick up supplies, take clients out, that kind of thing. That's all business use of your own automobile. And so what you would do is you would track all of your gas, all of your maintenance, your insurance, everything for the whole year, and then prorate it based on the kilometers you drove. So the best way to do this, and sorry, again, best might not be the right word, but the most correct way to do this is to keep a logbook at the beginning of the year or whenever you start your business. You put down how many kilometers your car has, right? You keep track of each business trip. You'd say what day it was, where you went, and why it was business related, right? So, if we went here, it was a client meeting. I went here to pick up business supplies, right? And you'd say how many kilometers that was. And then at the end of the year, you figure what the total kilometers on your vehicle is, and then you prorate it, right? So you add up all those trips, say that's 10,000 kilometers, and you started with 10,000, now you're at 30. So the whole year you did 20, and you write off half of your auto expenses, right? If you buy a dedicated vehicle, so my electrician buddy, right, went out, he bought a dedicated van that had all of his supplies in it. At that point, you don't need to do all this tracking. If you're using that van 100%, or sorry, the words in the act are all or substantially all, which is generally 90% or more. Kelsey's smiling because I use that in real life as well sometimes on her. But so if you're using a vehicle 90% or more for the business and you've bought it for business purposes, right, you just set that up as a capital asset. You don't need to track the kilometers because that's all business use, right? But when you're just using your personal car for sporadic items, it's not a business dedicated vehicle. That's when you want to make sure you're tracking. So the logbook thing, there's lots of examples online and electronic ones you can download. You can just do it in Excel. Most people actually just get a physical book and put it in their car, right? And that way they just write down where they went and as they get home or as they're leaving or what have you, right? But there is actually a requirement from the government to have one in order to substantiate how far you drove. Most of my clients, I would say, all or substantially all of my clients did not actually do this when I was at BDO. They didn't keep a logbook. Why would I? Blah, 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 right? That's so much work and effort to write something off. And while I definitely sympathize with that, CRA started cracking down on this a couple of years ago. So there's all kinds of audits relative to automobile expenses, and especially when it's the owner writing things off as an employee, weird situations like that. But so I will stress that it's becoming more important because many people just had their whole auto expense thrown out because they didn't keep a logbook to support anything, right? Government comes in, they say, well, you don't have a second vehicle for the business. So this is just your personal vehicle and you can't substantiate how far you drove for work. So we're not letting you write anything off, right? So that is kind of out there. So it's more important these days. If you haven't been doing this and you've been operating this for a while, by all means, feel free to put it on, like your auto on, estimate the percentage and expense, but there is a risk CRA comes out and says, hey, no, you have nothing to substantiate it. You're out, right? Again, I say, as long as you're being reasonable and you're actually going back and saying, this is what I did for business, right? I would put it on, take the risk, it gets audited and kicked off just because you don't have the documentation. But I'm not saying go as far as say it was business kilometers when it wasn't, right? That's the fun gray area we get into as accountants. So, all right, any quick questions on the vehicle stuff?
So with regards to okay, so the log is for the kilometers that you use, but the maintenance and everything, that's just a separate kind of thing that we put on the side, kind of attached. But
so similar to the home office expense piece of the form, there's a separate form for vehicles, right? Where it would say, well, actually it's right here. So it's kilometers you drove for business, total kilometers you drove. Here's your fuel, your interest if you lease, or if you have a car loan, your insurance, the license for all these costs, right? And then it prorates, right? So you still have to keep all your receipts for gas to substantiate the total gas number you put here, right? And then you would prorate what portion of that gas for the year was business and what was personal, and that's what would expense it. And it all just kind of goes in this form and does the calculations for you.
Okay, and then we're allowed to take pictures again, just making sure.
Yep.
Allowed to take
Yep.
pictures of them instead of hard copies. Perfect.
Absolutely. Yep. Cash receipts are an annoying one where CRA would prefer you took a picture because they, you lose just the way they print and the carbon or whatever, just you lose it all by the time they look for it sometimes, right? Then you're like, well, I have a receipt, it's here. Right? So
It's like a
pictures are probably better. All right.
Thank you for being patient with me on that question.
No problem. That's what we're here for, right? So, okay. I'll now jump into HST, everyone's favorite. I'm sure for the most part, most people have Googled this, looked it up, but again, feel free to come in with any questions you got at this point. I'll run through pretty quick at this point. So everyone, I believe, has heard at some point the 30,000 in sales, right? That's when you must register for and start charging HST, okay? You should not be charging HST if you're not registered, unless you're supposed to be registered, in which case get registered, right? The key here is that everyone knows it's the 30,000 per year, right? But the key is actually that the calculation is 30,000 over the previous 4 calendar quarters, okay? So if you start your business in July and do 20,000 of business by December, and then do another 10 and then in the following January, that's when you've hit that 30,000. You can't just say, oh, I've only done 10 so far this year, right? Because in the past 12 months or the past 4 quarters, so it's always January to March, April to June, etc., right? You've hit the 30,000. Now you've got to start charging HST. Okay, so it's not an annual basis, it's a rolling 4-quarter basis. Once you hit that 30,000 point, right, you've got till the end of that month or the beginning of the following month, basically, to register and start charging HST. Okay. If you've been charging HST and are not registered, you need to backdate your registration to when you started charging it and give the government all that backdated HST. And if you haven't been charging HST, but you should have been, what they'll want you to do is go back into the sales you've collected and take out the HST portion by, a formula and still give them that money because you were supposed to be registered, right? Now, as I say all of this, there is one prime benefit of being HST registered, especially in the startup phase, and that is that you can claim HST you pay as an input tax credit, okay? So that's kind of fancy way of saying you get your HST back once you're registered. So the key here is that it's based on date, right? So for those of you who are talking about business expenses dating back to 2017, right? If you were not registered for HST all the way back there, you can't go back and claim all of those, right? You have a 30-day window to go back unless you were doing something wrong where you were supposed to be registered earlier. They'll make you go back. But for now, you've basically got a 30-day window to go back and get backdated registration, or just register moving forward, right? To get ITCs on the HST you're paying. So in the startup phases, what generally actually happens is you end up getting HST refunds, right? Because if you're not making money and you're not charging more HST than you're paying, right, you're going to get the HST back. When you're buying expensive upfront capital items, even though they depreciate over time for tax purposes, for HST, you get the whole HST back, right? So it's important to a certain degree that you may want to get registered early, even if you don't have the 30,000 in sales yet, if you're putting out lots of expenditures. If your business is a service business, this is less important, right? Because you're not really going to get that much of a refund back. You're not investing any big capital startup items, right? But where you're spending a lot of money up front and there's HST on those things you're buying, it can be beneficial to actually get HST refunds to start out, knowing that in the near future, you're going to have to register anyways, right? The other thing is these days, most people expect people to be HST registered. So it's a bit of an expectation that there's the extra 13% on top of everything anyways. And if your consumer is a business themselves that is also HST registered, they won't care whether there's HST or not, because they'll get it back when they do their HST refund, right? So there can be some benefits to registering early to get these refunds, right? Quick comments are that in Ontario, HST is 13%. It's added on top of your bill, right? So if you're charging $100 for something, you add the $13 to that for HST and you charge 113. You keep that $100, the 13 goes to the government, net of whatever HST you paid, okay? When you're starting out, people with sales of less than 1.5 million get to file annually. So you only have to file once a year. Same as your tax return deadlines, the HST return will be due on June 15th, but you have to pay any money you owe by April 30th, which again, basically means you need to figure it out before April 30th, right? That extension is kind of a, why bother to me sometimes, but it is there. So I do make sure I note it. If you are filing more frequently, the deadlines are based on that filing. So you can file monthly, especially if you're someone who doesn't trust yourself to hold the HST until the beginning of the next year, right? Net of the ITCs, you might want to just ask to file more often so that you make sure you're paying them on a regular basis. But for the most part, in my opinion, I'd keep with the annual so that you've got the money that time. You don't have to give it to the government early, right? But yeah, that's my general spiel on HST, and now I'll open up the question time. Or no questions? Okay.
Brooke, go ahead.
Sorry, this is going back to the partnership thing.
Yeah.
It's so confusing to me, but we each report our own share of the income, right?
Yes.
So if we're 50-50, would I only report 50% of the HST?
So I would say that's a great question. I would want to double check with an HST specialist on that. You might just want to put out a quick email to one. But in general, you would either have a partnership HST registration, in which case the partnership would file the HST returns as a whole for 100% of the HST and 100% on 100% of the sales, right?
Okay.
And then you would just be reporting your share of the net income on your personal tax return.
Okay.
However, I've also seen instances where the partners are individually registered for HST and only report part of the sales. To me, that's more work, right? And I would suggest that the more common situation is that the partnership registers as its own business number for HST.
Okay.
It deals with all the HST at its level, but I have seen it the other way.
Thank you so much.
No problem.
Evody, do you want to try asking one of these questions?
Definitely not.
Okay.
I don't know where to start. It's just a second. Okay, just a second. I am like so new to all of this that I think I just need to meet with Ryan and then one by one, because I wouldn't even be able to properly apply the question, like the answers to the questions I'm asking, because I have no idea about any of this. And yeah, so it's a lot.
Okay.
But thank you for sharing all of this.
No worries, fair enough. And I mean, I can always try my best, but I respect that. Yeah, sometimes it's more complex and needs some extra time and some extra detail for sure.
Any questions about HST?
All right. One thing I just thought of while we were sitting here, relating back to the multiple business question that a few people have asked, the $30,000 sales limit is it considers all of your associated businesses. So for those of you who are running multiple businesses, the 30,000 in sales applies to all of them together on a combined basis. Okay. So if you have 20,000 a year in sales from each business, you're going to be over the limit, right? And you will need to start registering for HST. That also counts if you have a corporation that you control. Okay, so if you have a corporation you control that has 20,000 in sales, and you personally as a sole proprietor with a different business have 20,000 in sales, right? It counts on an associated basis, which is a complicated tax term, but essentially it's the businesses you control. Just a quick plug there that I don't normally see at this stage, but sounds like is applicable to some people in the room.
I actually have a question with regards to that now that you mention it. With regards to, because my two companies are very, very similar, and I know you talked about like you can put them on the same 22 whatever form you said.
Yep.
I'm not sure to quote it properly now. It came into my head and then it went away. So do we have to register both businesses for HST, or can we run it under the same? I guess it's both separate, but that's my assumption.
So that basically comes down to the same question: is on a basis of facts, do you have two businesses or one, right? So if there are two businesses, they should each have their own HST account. If it's one business, then you can register it under one business number. When you're a sole proprietor, I have seen in practice often that people will just have one HST number and start running their second business under the same number. But you do want to, and at the end of the day, it nets out to the same position, right? So it's not really a factor in deciding, right? It just matters. You want to come down to the facts. So if you have two businesses, you probably have two HST numbers. If you have one business, you have one HST number, right? Once you're incorporated, each corporation has its own business number, in which case it has to have its own HST account as well. But when you're a sole proprietor, whether you can try to say I'm operating one or two, but long in the end, it doesn't make a difference for the net amount you're going to give to the government or get back as a refund. And for the amount of effort for one filing a year, I wouldn't try to let that sway your thoughts on whether you have one business or two.
Okay, I'm using it for branding purposes, so that's why I'm asking.
Yeah, fair enough.
All right, thank you.
No problem. All right, anything else there? Okay.
Actually, do you have
So,
with regards to like, because we're doing the branding, because if as long as we have the GST like number is on the like the invoices, is that all that matters, or does the name actually have to be corresponded as well?
you do have to put your business name on invoices that you're giving out. Yeah.
Okay. Thank you.
Yeah, no problem. Okay. So the last section I have to cover here today is employment tax, and then we can take specific questions to that and any other general questions you got as well. Employment tax is important once you take on employees. So once you become an employer, so as soon as you hire someone as an employee, you're going to need to obtain a business number. If you have an HST number already, you'll notice that the number, it's 9 digits and then like an RT001 for HST. It will be the same number with an RP0001, but you do need to open that program account. That's what they call it at CRA for payroll specifically. Okay. So whether you have a number or not, you do have to get a payroll program account opened. And if that needs a new business number, that's where you have to start, right? I've included just a link here to CRA's a website that is how to get a business number and the various ways you can do it. If you already have a number and just need a program account, you can do that online through the My Business account as well. When you're new remitter, you're considered a regular remitter. And so that means that each month by the 15th of the month, you need to pay any remittances. So any CPP, EI, and income tax you withheld from your employees' paychecks to the government by the 15th of the next month. this is all based on when they're paid, not when they did the work, right? So if you do the work for the last 2 weeks of June, but you pay them on July 3rd, right? That paycheck is in July, so you need to pay those remittances by August 15th, okay? If you're required to change, so if you have too much payroll, right, to do this, the CRA lets you know through through mail or through your My Business account, depending on what you've got set up. In order to figure out the deductions that you need to withhold from your employee, CRA provides an online calculator. In general, I believe EI is 1.4%. CPP is, I think, 5.25% now. It keeps going up. We're in a transition period where that one's rising, right? For CPP, you have to also pay the government an equal amount to what your employee does, right? So you have to pay the employer portion, and it's equal. For EI, you actually end up paying 1.4 times whatever the employee had for the employer portion of EI. And then the employee pays their entire income tax withheld. You don't have to withhold, like you don't have to pay into their income tax installments, right? So there's a nice online calculator here for you to use. It's important once you go through, the first kind of page you have will include what you need to withhold from their paychecks. So you would put in the gross pay, their TD1 level, so how much credits they have from a personal standpoint, and how much you've paid them so far this year. It will calculate what you need to withhold and tell you what the net amount you should give your employee is. At the bottom, you'll hit another button that says show me my remittance slip. So it will show you, this is how much you took off your employee's paycheck. This is how much you should be putting in as well. And here's the total amount you should send to the government based on this paycheck, right? So it's a very helpful tool. If you get into some of the softwares, so like QuickBooks especially, I know specifically has this, you can get a payroll option. I would suggest for a couple of employees, maybe it's not worth the investment. I know it costs more, but once you really get going on this stuff, or if you just don't feel comfortable doing the calculations yourself, I would suggest that that's when you'd want to use this automated piece in the software, right? So it'll do all these calculations for you. It connects to, QuickBooks will go online and connect when the year changes over to get new payroll rates. So it's always up to date when you've got the subscription, right? But if you're going to handle it yourself, this calculator is invaluable, right? At the end of the year, I'm sure everyone's gotten a T4 at some point, right? As an employer, you are the one who has to go in and prepare those. So that can be prepared through your My Business account. It can be prepared using software, etc., right? Any employee for which you've had to take a deduction off, you need to give them a T4 no matter how much you paid them. So if they worked one day and made $27, but you appropriately withheld tax and EI and CPP from it, you need to give them a T4 for that. Okay. Also, any employee that manages to not have any deductions, but you paid more than $500, you also have to file a T4 for them. And then when employees quit or leave or are terminated in any way, you have to file records of employment for them as well. Okay. One question that is very prominent out in the market these days is whether someone is an employee or not, right? So we've had people on this call talk about being an independent contractor. As an employer, you obviously love when the people you're paying are an independent contractor, because you don't have to go through all of this headache of having an employee. There's extra costs involved in having an employee, right? So you have your portion of CPP, EI, any benefits you're giving them, et cetera, right? So as an employer, you would prefer to have an independent contractor. As an individual doing the independent contracting, they may prefer one way or the other depending on their own individual situation, right? But if you get it wrong, it's the employer that's on the hook for all of the deductions, right? So it is important. It's a very important conversation for you to have it's an important item for you to figure out as the potential employer. Okay. Without going into too complex of and description here, most of it really boils down to the control and responsibility, right? So if you have someone who is going to show up to work for you during these hours on these days, right, and you are the one giving them tasks to do on a regular basis, they are likely your employee. If you sign an employment contract, that's generally a good indication that you have an employee, right? If you have someone where you're giving them a fixed amount of money to go do something for you, and they can decide in loose terms when they're going to do it, right? So they don't need to be there from 9 till 2. They just need to get it done by X date, right? And they can be there overnight. They can do it, work on it whenever they want, right? If they have control in that, if they have a risk of profit or loss on their side, they're likely an independent contractor, right? If you were to essentially do a Google search for this, you would want to look at, I think there's the 6 tests of employee versus an independent contractor. Will lead you to some of the case law where that was determined, but most of it, again, it resides around control. So who controls the hours they're working, when they're working, and what they're doing, right? Specifically. Risk of profit and loss, right? So if you're giving them a fixed fee and it doesn't matter how long things take, and they may lose or make money on the deal depending on what they get their costs for, etc. Right? When I'm hiring someone to build a deck for a fixed fee and they have to go out and buy the lumber and buy the supplies and then spend an amount of time on it, they may lose or make money on that. I don't know. I'm giving them a fixed fee and I'm getting a deck, right? Whereas if I'm saying, I need you to put in I need you to make this system for me, and I'm willing to give you this much per hour, or I will pay you for this many hours to do it, right? That's more an employee because you're the one risking, no matter how long they work on it, you're going to pay them a compensatory amount, right? If you're covering all the costs of it, you're just going to give them supplies and a fixed fee amount, right? And they're going to be controlled by you on when they're going to work and everything. That's different, okay? Another test is who's providing the tools and equipment. So this doesn't always work these days because there's a lot less of that. But if I'm hiring a contractor and they're bringing all the tools to come and do the job, right, that they're probably a contractor. Whereas if I'm hiring someone to come build the deck for me, but I already bought all the supplies, here's all your saws and drills and tools and everything, right? That's more, oh, maybe I'm an employee or I'm an employer because I'm employing someone to build the deck, right? I don't remember all of the tests off the top of my head, but there's going to be a couple of more, but those are the main ones. And when you look at it, the lists are generally prioritized so that these are the most important things, and the control and the risk of profit and loss are the most important pieces of that, right? So I'll open that up to any questions here at this point on the employment stuff.
Yes. So everything that you said, how does that shift for international? Well, after everything you said, they are employees.
Okay.
But how does that work when, they don't get the NEI stuff? And they're in Africa. So yeah. So how does that work when it comes to that? And also when it comes to backdating that, because I've been doing this for coming up on a year now, working with them.
So there's a couple factors here at play, and again, I can mostly give you some general comments here that I've definitely not done employment tax for international employees before myself. But the general comments are focused around the place of employment, right? So if these employees are not Canadian residents who have gone to Africa to do the work, if they're residents of Africa, like wherever they are, if they're residents there, they're doing all the work there and they're being employed there, especially by an international company that's, like I believe you said, I'm assuming these are going to be in the same country as your international corporation you're talking about.
Yes, it's in
right?
Nigeria.
Yeah, so in Nigeria, you're going to be under Nigerian employment tax law for that, right? So because they're not Canadian employees working for a Canadian company, right?
Mhm.
You don't have the Canadian employment tax law on them in general, right? So
Well,
there are cases where you fall into that, but um,
the company that is incorporated there, they do work for that one that like the income doesn't even come to Canada at all, but they do work for me as a sole
sole
proprietor in
proprietor
my
in Canada.
business here.
Okay. Um, so again, I mean, I'll keep my comments general that if the, you know what, like, yeah, that's that one where they're working for a Canadian company in another country, but resident in that other country, and that's kind of the place of it. Like that's where you're getting into a lot of like gray tax law, essentially, and would want to consult versus me being able to answer it on this call.
And who would I consult? Would it be a lawyer or would it be an accountant?
I would still probably suggest that it would be an accountant.
Okay.
You'd want to consult. So where lawyers are generally the professional of choice on this is when you're getting into, you know, employment contracts, termination issues, legal disputes, right? From a employment tax perspective, you're generally still going to deal with an accountant. You're probably going to want to deal with one of the big accounting firms that have an international presence, though, because they'll all have international departments to help you out on this. Yeah.
Thank you.
No problem.
I just have a quick question too. Do you have to pay contractors tax?
So that okay, so good question. So the contractor themselves need to determine whether they need to be registered for HST or not.
Let's
right?
assume they're not.
Okay,
Because
so
I'm kind of like the middleman between, you know, contractors and their clients. And let's just assume that I'm able to call them subcontractors. We'll just go from there.
Okay, so that actually you've complicated your question versus made it easier, unfortunately. But so I would say, so in general, when you've got an independent contractor, right? You don't withhold CPP, EI, or income tax, right? And then it's up to them whether they need to charge you HST or not, right?
Yeah.
Once you've made the determination that they're an independent contractor, that's where kind of your responsibilities end from an employment tax perspective, right? Because they're not your employees.
Yeah.
Right? Now, if you are contracting a job and you are subcontracting out to someone else, right? You actually have to file T4As.
Yeah, I actually knew that. I'm happy.
Okay. Stuff. That's great. A lot of people get hit with that one and don't know that one ahead of time. So
I only knew that because QuickBooks said that I have the option to manually or automatically create a T4A. I'm like, oh, okay, that's good to know.
yeah. So those are also due at the end of February, same time as the T4s for the previous year. And basically, you're just reporting the net amount that you paid to them as subcontractors. So
yeah. And if they made more than $30,000, are they going to need to pay out to income tax?
So again, so as a subcontractor themselves, it's on them to figure out whether they need to be registered for HST. If you have paid them more than 30 grand, then they definitely should have been registered for HST.
Yeah.
And as a subcontractor, they're going to be, so they would charge, so you would charge your client, right?
Yeah.
And so say you're going to charge your customer 20,000, right?
Okay.
I mean, I'm going big here, but you know,
it's a little big, more like $25, but it's more like 25. We do a per service kind of thing, but it's okay. But you can still go with your $20,000 example.
For round numbers, I'm just going to use $100 then, right?
Okay.
So if you do more than 30,000 of sales to your customers, right? You have to register for HST. So you would charge your customer $100 plus HST at 13%, assuming you're in Ontario, to charge your customer $113. Okay. You turn around and you give your subcontractor $50. That extra $50, that's your profit, right?
Yeah.
That subcontractor you're giving $50 to, they need to invoice you for that $50, right? And if they're registered for HST, they'll invoice you for 50 plus HST, which will cost you, I think it's like, $56.50 or something, right?
Yeah.
So you would pay them the $56.50, right? Your profit would be the 100 minus the 50, and the HST you give to the government is the 13 minus the 650, right?
Oh, okay. I can see now how I complicated my question.
Right.
But okay, that makes sense.
Yeah,
For the most part.
because that's your profit as the middleman, is the upcharge you're giving to your clients, right?
Yeah.
Now, if you're just charging a service fee, either way, that's a different scenario. But if you're charging and then subcontracting the work, that's how it would work out in a typical scenario that you're describing here.
Okay, yeah, that definitely answers my question. Thank you.
No problem. But yeah, if you want to be a really good, subcontractor or contractor, I guess, and you're noticing your subcontractors are not charging you HST but do a ton of business with you, right? You might want to be double checking with them that they're not missing that registration or something, because that could come out of their pocket, right?
Yeah, well, that's the thing. I actually used to deliver pizzas for Domino's, and when I first started, I was a subcontractor for Domino's. I was not on payroll, and so I just assumed. Sorry about that. I just assumed that it was, kind of easy to get somebody as a subcontractor. And I never invoiced Domino's. They just did this thing, and they gave me a piece of paper, and I said, okay, thanks. So.
Yeah.
It's just,
a lot of big companies, especially like, your rideshare companies and stuff, in order to take the effort out of the hands of their subcontractors and make it easier for people to come work for them, they'll handle a lot of things for you, and you just might not even notice, right?
Yeah.
But yeah, as a subcontractor, you technically were the one normally you're the one on the hook to make some of those determinations as to whether you should have been charging an HST or not. But yeah, they'll tend to take that out of your hands to make it easier and to make sure things are done right, because at their level, it's such a headache when you have that many subcontractors to manage, that this one does it one way, this one does it another way, this one does
you
it
kind of need to,
and we don't know what we're doing, and we lose track of right, like, so they'll just take that administrative task on. And if you grow your business, have a ton of subcontractors doing the same thing that are primarily working for you, like, that's another scenario too, right? But yeah,
and that's kind of what I'm hoping. That's what I'm trying to lead towards. If I'm expandable, then that's the direction I'm going. Because payroll would be, a lot more on top of the cost of goods.
So that's some great questions, and actually brings up one more point I wanted to make here. I did forget one of the other primary of those 6 factors I said with the employment, right? A major factor is whether that person has one person that they're subcontracting or that they're independently contracting to, or many, right? Now that's something you have to kind of ask them to get the right detail on, right? But if you have a subcontractor doing work for you, but they only work for you, and you tell them, you can't go out and work for other people while you're working for me, right? That's when you're again falling into an employer situation versus an independent contractor. Now, if there's someone, like you said, if they want to, I'll use your pizza delivery thing, right? If I find a subcontractor to do pizza delivery for me, and they just really like me as a contractor and only do pizza delivery for me because they want to, that's a totally different scenario. I had lots of people who were independent contractors that would, only work for one customer for like 3 to 5 years because they just kept getting really good contracts on little things, right? But that doesn't make them an employee just because they're only contracting one person, but it's a factor, right? And if you're the one saying, I know you're doing pizza delivery for me now for Domino's, right? You cannot go deliver pizza for Pizza Hut. Then you're like, that probably means you're more of an employee versus a contractor, right? Whereas if I don't care if you're delivering for Pizza Hut and everyone else, right, then it's definitely a contractor position, right? But, all right, any other questions on employment, or just general questions at the end here? So I'm at the end of the prepared materials here, so if you have any other questions, feel free to let me know.
You all questioned out?
I know taxes a lot. Feel free to reach out to Kelsey with future questions. Sometimes she asks me some some questions off to the side when you guys have some tax questions. But yeah, with that, I guess I'll end things, and I hope everyone can take some tax knowledge away from this. By all means, the goal here is to teach you enough about tax that you could do your own tax return if you wanted to, or that you're better prepared if you are getting an accountant involved to be prepared on what you want to give the accountant and have some more knowledgeable conversation with them as well. So hopefully you've gained some experience there and I've answered your questions, and it's been great talking to you all today. I always enjoy doing this session. It's really great to see everyone get the tax knowledge, have those aha moments. Those ones are always fun, and it's been great working with you. So thanks, everybody.
All right. Thank you, Taylor. Last call for questions. Going once, going twice. Sold to me. Okay. Thank you so much, Taylor. I'll see you in just a few moments. But before we sign off, can we give Taylor our Leap Junction thank you wave and thank him for his time and for joining us. So if your cameras are off, and if you can, please put your hands up to give us a wave. And if not, the clapping emoji will do great. Thanks.
Thanks, everybody.
Bye, Taylor.
Bye. Oh.
Oh, that's pretty cute, Tracy. Oh, and Rachel's dog. Oh my goodness.
Oh, he just said, "Oh," you guys missed it, but he said, "Oh."
Oh. Wonderful. Well, thank you everyone for sticking with that. As Taylor mentioned, we do know that taxes maybe are not the sexiest topic that we go through in Leap In, but they certainly are important. Yes, Ashley, we do not have Leap In on July 1st. That will be a 2-day week for us. And actually for your team at Leap Junction as well, Dave, Jenny, and I, and the college for that matter, is actually closed also on July 2nd. So if you do have any questions for us that week, get them in at the first half of the week. So we'll have our sessions on Tuesday and Wednesday. We will be around on Monday, but we won't be having office hours or any other types of hours on Thursday or Friday of that week. Yeah, big day. Lots of talking about regulations and numbers and such. Before we sign off for the day, does anyone have any questions or comments either about this or anything else?
I have a question for you guys if you're able to stick around after.
We sure are.
Awesome.
All right. With that, we'll close with a reminder that tomorrow is Hat Day. Please make sure that you have your hat. You are ready to wear your hat in whatever way getting ready to wear your hat means to you, and that you are accessing internet at some point that will allow you to turn your camera on, at least temporarily, to take a photo with your hat. We look forward to hatting a great time with you tomorrow. How's bad? Yeah, you're allowed to leave. That's cool. All right. Thanks, everyone. Good day today. We're sticking around if you have any questions. Otherwise, we will see you tomorrow.
Can I come back in 10 minutes for our so I can go through this the proposal with you?
Yeah, Ebony, if you want to come back in a few minutes, that's great.
Okay.
Or yeah, let's do that.
Am I wanting